I'm taking from that tech stocks not doing great this morning. Michelle McKinnon is here. Scott Martin's here. Liz McDonald, Ashley Webster, of course. I'm going to start with the GDP numbers. 2.9% growth for all of last year, 2018. Am I right? 2.9 was it?
Yeah, for the year.
For the full year.
2.9%. Thank you. Now, Michelle, the economist, they got it wrong again.
They got it wrong again, Stuart. And what is so interesting is economists time and time again underestimate the growth. And I think that's really what you're going to see even this year, that there's going to be surprises on the upside, not the downside.
So, on the upside?
Yes, on the upside, not the downside.
You've always been bullish.
I have, and look what happened. The market's returned.
Well, if you're right, you can be bullish. That's fine. All right, next case. No deal with North Korea. The president said he just had to walk away. Better have no deal than a bad deal. Scott, come on in, please. I think this sends a message to China that the president is prepared to walk if he doesn't get a deal that he wants. What say you?
Yeah, and I think, Stuart, to your point earlier on the show, I think it should make China very nervous because it shows that this president is not just going to lay down for a cosmetic deal, as we've seen previous administrations do all the way back to times, guys, to kind of date myself here, when Paul O'Neill, Treasury Secretary, would talk tough in America, go overseas, and let China continue to manipulate currency. So given that North Korea and China are BFFs, the fact that they're major trading partners shows China that we're serious about our business, and they better come to the table with a deal that's fair.
Okay. Next case. Elon Musk. He's changed his name to Elon Tusk on Twitter, and he's teasing that he'll be announcing something big this afternoon. Now, the stock went up big time yesterday on that news. It's up another $2 today at 317. Michelle?
Yeah.
Teflon.
It's Teflon, and I really think this price is entirely too high, simply because when you look at other auto companies, I mean, it's crazy. It has a crazy price.
Okay, wait a second. Is tomorrow the deadline when he's got to get the stock to 357
plus?
And if he doesn't, what happens?
He has to pay out cash, and Tesla does, a $920 million on a convertible bond. And here's the thing. That's a quarter of the cash on the balance sheet. They have a debt problem there. Tesla is rolling forward Solar City debt, too. So they've got a big debt problem.
State of play. Tesla's stock right now is $318 a share. It's got to get to $357 tomorrow, and if it doesn't, he's got to shell out $900 million cash.
And stay on this for a second. This is why the SEC has been going after Elon Musk, because he's cheerleading the stock higher with tweets. And that's why we think the SEC has been cracking down on those tweets, because Tesla is known to be a momentum play on Wall Street. He's touting and cheering it higher, maybe to hit that mark, too, so he doesn't have to pay out the cash.
He's got a few hours left, and that's it. Check the big board. It's a go-nowhere day, despite a jam-packed news background. Look at that. We're down, what, 0.75? 25,984. Individual stocks, here we go. Weak sales at L Brands, that is the parent company of Victoria's Secret. Weak sales, down it goes, 8%. Not so rosy forecast from Fitbit, the wearables people. Down 15% there, back to $5 a share. HP, much bigger company, obviously. Their sales target fell short, or they fell short of their sales target, and the stock is down 15%. Let's talk retail. JCPenney, better sales over the holidays. The stock is up 18%. That is all of 23 cents. Got it? SeaWorld, their revenue fell short. Let's see what happens. The stock is up 11%. I'll have to sort that one out for you. Two items on Amazon. Getting replaced by Costco as the new leader for customer satisfaction in internet retail. That's a surprise.
It is the first time they haven't been #1 since 2010.
Right, so Costco executes better than Amazon. That's
according to the survey.
And Amazon is starting to let brand owners delete listings on the website for products that they deem to be fake. Now, what is that?
Counterfeit products on Amazon is a huge problem, and a lot of these big brands are beginning more and more upset with Amazon for not doing enough to counteract it. Normally what happens is you complain, it goes to an outside monitor who then looks into it. Amazon getting much more aggressive and taking the unusual step of allowing brands to eliminate what they believe are counterfeits selling on that platform. Amazon says it's going to keep a very close eye on it because obviously you don't want these brands to eliminate eliminate legit businesses. And what they do is, like, say, Nike, they look at this site and they go, we're not sure this is legit. I think this is counterfeit. So they buy the product and then test it and see whether indeed it is their product. But this is one way of attacking what is a huge problem of fake counterfeit products on Amazon.
Well, they're trying. Okay.
They're trying, yeah.
I've always been interested in Marshalls. I like the store. I like the product line.
Yeah.
I like the prices. Good. They're getting ready to launch online shopping. Marshalls. Well, they're known for bricks and mortar, and they've got quite a following. I'll get to you in a second, Michelle. But how about you, Scott? I like this, and I like Marshalls. What do you say?
I'm kind of surprised. I mean, I guess I don't know what's more surprising about this story, the fact that they're doing this or that Marshalls is still in business. No offense. But it's also obviously a part of TJX, which has a conglomerate.
What are you talking
about? I don't
about?
shop there, so what do I know? Here's the thing, though. It's kind of funny, though, how they're following kind of that Amazon model. I mean, you guys talked about in the previous segment there about how online retail is the way to go. The world is big enough, my friends, for other companies to come in and challenge Amazon. Whether they succeed is maybe not as much of a big deal as the fact that that online pie is getting bigger and bigger, and that's the piece they want a part of.
But, Scott, the only thing you can't get online is the experience of actually being in the store. And I think one of the joy... No, listen, let me finish. The joy of going into a Marshalls, and I'm sure Stuart will back me up on this, it's like a great big treasure hunt. You go through all those racks of clothes, and all of a sudden you find a gem, and it's $10. It's kind of exciting.
What do you got, Michelle?
Absolutely, I agree with you, Ashley, because even my experience going into those stores, you find really great brands.
Yes,
and
you do.
It's like you're treasure hunting, and you find them for like 50 to 70% off. I think it's a great idea. I love the fact they're going online.
Make your
Who's
point.
got time for that?
TJ Maxx has $36 billion in annual sales. So women and men like to shop there. The stores are always packed. And watch what TJ Maxx CEO is saying. They're finding with their website for TJ Maxx owns Marshalls. More shoppers went into TJ Maxx after they went to the website, so it's increasing sales.
Okay, I'll take it. I don't know what Scott Martin's on about over there.
Right. 1 versus 4.
Okay, right. Not fair, is it? Facebook says its delete history button will be ready this year. In other words, look, let's get this clear. One click deletes everything you've ever done on Facebook. Now, I love it, Scott. Yes. I love it. But I don't think it's very good for advertisers, right?
No, that's not good for advertisers, and it's a great concept. Love the concept, love the idea of Facebook after they stole so much data. Maybe it just goes to show they have so much data that they've stolen us. I know Google does, that they don't even know what to do with it all, so maybe they can afford to delete it all. But do we trust them, guys? Is there really such thing as a, hey, we're going to delete this and forget about everything you told us? Not so sure.
Okay, I've got to move on. I know you all want to comment on this, but I've got this from Martha Stewart.
Yes.
Partnering with the marijuana grower, Canopy Growth. Tell me more, Ashley, again.
Well, yeah, this is the Canadian giant cannabis company, and they're delighted to have Martha Stewart on board, who's going to help them develop products for both humans and animals, by the way, that contain CBD. That's the calming aspect of marijuana. She's going to not only help develop products, but how to merchandise and how to sell them. Okay. And she's good at that.
It doesn't get you high. It just helps you with various
areas. It's a relaxant.
Correct. It's a relaxant.
Yes. It doesn't get you high. Okay. You may not have realized that the battery people, Energizer, they're going to make a line of smartphones. I didn't know that.
What?
Yeah, they do. The latest one boasts a battery that lets you make up to 90 hours of calls, listen to 100 hours of music, and watch around 2 days of video on a single charge.
Wow.
The point is, the thing looks like a brick.
But you know what's so irritating is having to recharge your smartphone every other hour.
Yeah. Absolutely, especially now.
Funny.
I think it's getting worse. Yeah.
Kind of interesting.
Yeah, but you're going to put a brick in your pocket?
It's looking.
And did you know that Energizer's got a smartphone?
No.
But it's a great brand,
Who
right?
knew?
No.
Who knew?
Apple needs to buy them.
What do you say, Scott?
Apple's got all this cash, Stuart. We talk about the improvements they need to their ecosystem. Yeah. I agree with the panel. The iPhone battery, mine goes from like 20 to 15 to 1, by the way, when I'm on the phone. So it drops right there and just messes with me. Apple should just buy Energizer, spend that cash and get the batteries fixed, get people happy again.
And don't ever call this a panel show again, okay? I got a problem with that. It's not...
my friends, I'm sorry. My
not your friends. Oh, well, let's move on. All right, Scott, your time's up. It's 9:40. Seriously, thank you very much, Scott and Michelle. We do appreciate it. As always, it's 9:40.